Some mistakes some traders do that they don't even know they are doing it. In this video, we are going to be talking about those mistakes and how to overcome them. In this video, I'll be talking about 10 important things you need to avoid in order to become a profitable trader. What I need you to do now is to get your pen and your book and start taking notes. Number one thing I would like to inform you traders is that you should stop jumping from one strategy to another. Stop jumping from one strategy to another, because jumping from one strategy to another is a big issue that a lot of traders don't know. Stick to a strategy, learn the strategy. If the strategy fails, it might be maybe market direction change or a fault from you. So try to stick to a strategy, learn the strategy perfectly, and apply it to your trading career. Stop changing from one strategy to another, because that is a big issue a lot of traders don't know they are facing. The second advice I'll give to you is to stop using too many indicators. On our early days of trading, you will see our chart like this. So scary. You even get confused towards the end of the day, because you don't even know which it is. This one will tell you do this one will tell you buy, this one will tell you sell, this one will tell you this and that. So using too many indicators is another failure on its own. Just indicators are meant to direct you, to give you entry point, to give you ideas of the market, not to use for trading. So stop using so many indicators in your chart if you want to be a profitable trader. So stick to just maybe a single indicator, 2 indicators is enough for you. Don't use so many indicators in your chart. Many indicators lead to failure. It will lead to the blowing of your account, because it will make you confused. It leads to confusion. So stop using too many indicators in your chart. Next thing I would like to tell you is to believe in yourself. Master the act of trading and believe in yourself. Stop following too many signals channel telling you to buy, sell, or do this. Once they give you an entry point and it is wrong, you are doomed to fail also. So study the art, master the art, and know how to do it yourself. Very important thing is developing a trading plan. Create a structured trading plan. Outline your goals, risk tolerance. Disciplined traders who stick with a tested trading plan will be a consistent, profitable traders. Stop relying on luck. Stop relying on luck. Be a disciplined trader. Plan your trading. Develop a trading plan. This will help you in your trading career. Avoid emotional trading. Try to stop it completely. When you trade with emotions, you make decisions based on what you feel instead of what the fact tells you about the market. So try as much as you can to avoid emotional trading, because if you keep trading with emotions, you keep cutting your losses, you will pile up a lot of losses and end up blowing that account. So try as much as you can when trading to avoid emotional trading. If you are trading on a demo account, stop as in making it look like it is normal. It is not your money and you just trade it anyhow. You don't care if you lost on a demo account, but you feel emotion when you are trading on your real account. And at the end of the day, you pile up so many losses and blow your account because you attach emotion to your trading. Another very big mistake a lot of traders do is by not journaling. When you don't journal, you tend to fail. Journaling is very, very important in forex trading. Keep your trading records, both winning and losing trade. This will make you know what you did right and wrong. Always write it. When you make a profit, write it down. When you make a loss, write it down. Once you write it down, it will direct you on avoiding those same mistakes in the market. So it is very important to always journal your trading activities. Next one I'm going to tell you is one very big and important one: not having a risk management plan. This is most important in becoming a successful trader because it helps you identify what is most important for your trading success and what limits are worth setting on your investment. A risk management plan lets you know how much you are willing to lose on a trade before entering it. It allows you to set stop loss and take profit orders if your trades start going against you. So, risk management plan is very, very important in forex trading. In order to become a successful trader, you need a risk management plan. You cannot be a successful trader without having a proper risk management plan. Each time you want to enter a trade, make sure you have your risk management plan. There are so many sites to check your lot size, your account size, the lot size, the proper lot size to use in your with your account size, and so on. So you need to learn the risk management plan before entering a trade or before in order to be a successful forex trader. So stop taking losses quickly. Give your trade enough time. Give your trade breathing space. If you didn't hit your stop loss, trust your analysis. Don't close your trade when you have already analyzed the market that it is and you're really sure it is going to so direction. Don't cut your trade. Stop cutting your trade because you will end up losing a lot of money, and at the end of the day you blow off your accounts. So stop taking losses quickly while trading. Trading needs patience. So you have to be patient. You can't rush the market. So wait for it to go to your either stop loss or to your take profits. Key advice I have for you is to keep your leverage at minimal. Stop over leveraging your account if you are not a pro trader. If you are not an experienced trader, stop over leveraging your account because you end up blowing that account. You will see some people taking leverage as high as 3,000, 5,000 leverage when you know you are not a professional trader. So avoid over leveraging your account. Minimize your leverage. At least 1:100 is fine for a beginner. Stop over leveraging your account because you will end up blowing that account. You try to learn forex trading before you go live. Try to learn it on a demo account for at least 6 months. Depending on how fast you are in learning, you can learn it within 3 months, 2 months, but advisably learn it for at least 6 months on a demo account before you go live. Don't jump into live trading because you feel you are the owner of your money, because you at the end of the day you end up blowing that account. So try to learn forex trading very well before you go into live trading. So the bonus advice I will give you is to stop over trading. Catch the big moves. Stop over trading, because if you over trade, it will end up failing. Because you might be winning consistently, and you keep trading, and at the end of the day, the trading will go against you and blow off your account. So stop over trading. Catch the big moves alone. Use proper lot size. Always use stop loss. And believe in yourself. Like I always say, believe in yourself. Be aware of the news events. Always check your news calendar. Always be aware of the news events for the day before entering a trade. Finally, there is no way one can avoid any mistake at all in forex trading, but a good trader will lower their chances of making repeated error if they know the common problems and avoid it totally. Thank you for watching this video. Kindly subscribe to our YouTube channel, share our video so that others can learn from this. Peace out and bye.